This has been a complicated one to follow, in large part because there are a lot of what-if scenarios. In terms of how you're covering this and thinking about it, what happens if, as is largely expected, Parliament votes down this deal?
Well, complicated sounds like a bit of British masterly understatement, quite frankly. This is hellish. And the reality is we just don't know. One of the reasons why the markets have not overreacted so far is because the balance of probabilities on both sides is very evenly balanced right now. Now, the most likely scenario is that if Theresa May loses by less than 100 votes, she will soldier on and keep going. She is absolutely a British bulldog who keeps going no matter what. If she loses by more than 100 votes, we could see a no confidence vote. We could certainly see a quasi-rebellion. We could see a strong market reaction. Theresa May probably will still try and keep going, but it's going to be increasingly hard for her to pretend that this deal has any chance of actually going through. Now, what's interesting is that although the surface of the markets are indeed outwardly calm, if you look at some of the positioning right now in the gilts market, some of the derivatives markets, people are starting to hedge their bets against potentially extreme outcomes. The problem is it could be extreme in either direction. It's entirely possible this will lead to no Brexit. It's entirely possible we'll end up with hard Brexit. And of course, there is the Corbyn factor, which frankly worries some market participants even more.
Map out what would happen for me if we were potentially to see that so-called worst-case scenario of a hard Brexit or a no deal. There's been a lot of talk about how terrible that could be, disastrous that could be for the UK economy. But so far, if you do look at the economic data for the UK, while some of it's been softer, it hasn't been nearly as bad as those economists had anticipated thus far.
Well, thus far, almost nothing much has happened in the UK economy. It shows a real reaction to Brexit. And if you're optimistic, you say, well, you know what, that just shows it doesn't matter that much. The whole thing's a storm in the teacup, to use that wonderful British phrase. But the reality is that nothing much has happened yet, in my view, because most businesses have been waiting to see what on earth is going to happen. No one wanted to spend money moving operations out or stockpiling supplies until they thought it was absolutely necessary. That is just now starting. So if we do have a hard Brexit, what you'll see almost certainly is a large number of trade industries and businesses start to panic and stockpile. You may see some consumer reaction as well. Already you'll see the government trying to position itself ready to try and calm down consumer panic. But for my money, the thing you have to watch, and which a lot of people in the government in Washington right now are watching pretty nervously, is the potential, the tail risk, as Steve Mnuchin calls it, for unexpected financial system consequences. Because although we had an incredibly important announcement made a couple of weeks ago that Brussels will try and deal with some of the derivatives problems if there is a hard Brexit, what people are starting to worry about is whether there could be other types of details in the financial system that start to be impacted in a hard Brexit that no one's thought about, a bit like, if you like, the Lehman Brothers shock and the way that that created unexpected consequences. Let's hope we don't go anywhere near there.
Gillian, I could ask you probably a dozen more questions, but I'll leave it with this. Does Theresa May leave? One more. Does Theresa May leave?
Does she leave?
Does she quit?
Not willingly. She is not for quitting. The lady's not for turning, said Margaret Thatcher several decades ago. She has the same view, but she may yet be forced out.